So do you want to know if you actually do qualify for that $0 health insurance that everyone keeps talking about? Let me show you what we're actually looking at when we're doing that determination. So if your income is, this is 200% FPL, if your income is below this amount, typically based on your household size is how many people you're actually claiming on your taxes next year. So if it's just you and you got some roommates and stuff, you don't claim your roommates on your taxes. So it's just you. If you are a family and you have like your mother and father or somebody that lives with you, but you're going to claim them on your taxes, then you can have them as your household size. Someone with some kids or something like that. Even if you are a parent with some kids that don't live with you, but you do claim them on your taxes, then that's a part of your household size. So kind of an explanation with that. And typically people that have like W-2 employees, that's your estimated income for next year. Obviously it could be a little bit lower, could be a little higher, but you're kind of estimating what your income would be next year when you're actually doing this. So nothing too crazy, $4,000, $5,000, $10,000, about $10,000, $5,000 or something like that above or below. You should be kind of good within the guesstimation. So between this number right here and this number, so on the opposite end, you need to make at least this amount. Business owners. So if you have a small business like a barber, stylist, nail tech, or any of those things, you can deduct a lot of those, a lot of your expenses in order to decrease it's called your adjusted gross income. Anyways, so you can decrease your income in order to meet some of these requirements. So typically between this amount and this amount right here, you typically will qualify for the better $0 coverage. I'll show you that right in between these. Well, this one and below, you will see how the prices of the policies do change. So let me show you what it actually looked like. So this right here, I'll put it in the Atlanta area. Say a person making $15,000. So based on this chart, right? Go back. Dang it! Come on. Okay, so based on this chart right here, I just put in about $15,000 to kind of guesstimate. And so this person qualifies for this amount in savings. So when you're doing that, this plan right here, this one right here is probably the one that I would choose. So $0 premium, $0 deductible, only $1,800 max out of pocket, no charge for primary, $10 for specialists, no charge for generic drugs. So you see a lot of these $0 costs, but some of these people be like messing up your things and then they'll put you in a different plan, but the deductible is much higher when you do qualify for this particular plan. I chose this one over this because look, you're paying $5 for the primary, $10 for a deductible, and no charge for that. Why pay for the primary when you can get it free? Technically you could, like looking at this max out of pocket, there's a couple of things that goes along with that, but I will like do a deep dive and see which one is better for the client, case by case scenario. So say the person put their income at $29,000. Okay, so you're still below this amount. So you can still technically qualify for $0 premium, but you see how this deductible went up significantly. So there's still other plans and stuff that's out there for you. So in this case, I will typically, for this one has a $4,700 deductible. That's not too bad. So I'll compare that one. Let's see, this one $2 for $7,500 deductible. Maybe even compare this one for $17 with $0 deductible. And let's see, if you want to go up a little bit more, then you see some of these to decrease some of the doctor's visits and stuff. So there's still options out there for you. So if I did just compare those, let me see, compare $10, $40, let me see, just compare this one right here. You'll pay $70 for the primary doctor on that one, $125 for specialists, you're only paying that, $3 for drugs, $25 for labs, $10 for specialists. This one right here, you'll pay for the emergency room 50% after the deductible. The deductible is $4,700, still not too bad. So usually basically I'll do like a comparison to see what actually works for the client. So if this one works for you, you don't see yourself going to the doctor or anything like that, or even this one's probably the best because these right here, you don't have to worry about the deductible. So you can go to your primary, your specialist, and all these things and don't have to worry about meeting this amount. So that's still not bad. Some of the other ones you probably would see when it says price after the deductible. So you actually got to meet this amount in order to even, let me go back to the other page. So somebody could easily switch your plan to one of these higher deductibles. This one right here, 50% after the deductible. So you can't go to a specialist. If you do go to a specialist, you'll have to pay 100% of the cost until you reach this $8,000. And then once you reach that $8,000, then you'll pay this 50% per doctor's visit. Some people get thrown into plans like this, $0 but a $9,100 deductible. In that case, you're paying full price for everything until you reach this deductible. 22 cent is only 22 cent at Kaiser, but you 40% after the deductible. You got to reach this deductible in order to get any costs associated with that. So don't let people just switch your plans and put you in things that you don't understand. So this one right here, so let's say if I put a household of one at $36,000, so you're still getting this cost savings, and this is the lowest price here. So it's only $1.90, it's $2, and you do have that $9,100 max out of pocket. You see the prices do go up quicker, but I will typically compare that one, again, case by case scenario for the client. If things work out however we want to do that, then we'll just go ahead, I'll let you know, and then we will look at a couple of other options. So if you can afford one of these other options that makes sense to you, then we can go ahead and look at one of them in order, just do a real plan comparison to see how it will benefit you in the end. So that's pretty much it. Oh, so what I need for you to do after this is just go here to obamacare.me. This is my particular funnel page, I guess they call it. You can look at these two videos if you want. This one right here goes into details about how people, when people are switching your insurance based on these ads, it's a whole mess. So you can look at this video if you want to, and so all you do is just click here to apply. So once you apply, you then just go ahead and answer all the questions. Everything comes directly to me. I don't share your information with anyone, and then I will basically do the exact same thing. So I'm not talking to you now, so I don't know any of your information. So once all that information goes into my system, I will put all your information in here, do the application for you, do the plan comparisons, and then once I enroll you, I'll go ahead and send you out those details possibly the next day. If you are a higher income individual, then I will just text you the next day, because I do all my applications late at night, and I'll just text you those details, seeing which option you prefer. Also, wait, I kind of messed up. So these are the cost share. You get cost share reductions. So you can still get a subsidy up to this amount right here. So up to this column. So when people are targeting you for health insurance, they're typically put an ad out there, say if you make less than $58,000, that's where they get this number from. So say if I put in $58,000 for an individual, you see this $340 cost savings, in this cost share reduction thing, that's for this and below. So if I put in $58,000, you only get a $48 a month savings, but in that cost share reduction thing is gone too. So the cost share reduction was going to help. It does help with your co-pays and your premiums. So with that being gone, you get savings in a sense, but they're definitely not as great anymore. So there are a couple of other options that's out there. We can do a short-term medical, or we can do different indemnity plans, or just other options out there. I do have a couple of other sources that I can use in order to get, especially if you're fairly young and healthy, that's when you need to go for one of those options. But if you are an individual and you have a lot of health problems, you definitely need to possibly just stick with the marketplace and kind of thug it out, legit, because you don't have to worry about you don't have to worry about underwriting. A lot of the other products that's off the marketplace, you have to worry about underwriting, and if you can't pass that, then we'll have to look at another option for you on the marketplace. So yeah, let me know if you need help with anything else.